Good morning, Mr. Buffett. My name is Jean-Philippe Kramers, and I'm coming from London, England. I have a question regarding Coca-Cola. The first part is, are you worried that the earnings of Coca-Cola might continue to be affected by the weakness in the emerging markets and the strength of the dollar over the next few years? And the second part is on the PE ratio of Coca-Cola at 35 times earnings. Are you worried about the potential rise in interest rates? And is it linked to your views on inflation that you are not worried about the rise in interest rate? Thank you.
Well, in relation to the strength of the dollar, which means that profits in foreign currencies don't translate into as many dollars, we don't have any big feeling on that. I mean, if we had strong feelings about the dollar's behavior vis-a-vis the yen or the euro or the pound or whatever it might be, we could give vent to those views by actually buying or selling large amounts of foreign exchange. We don't know which way the dollar is going to go. So I have nothing in my mind in regard to any decision on buying or selling Coke that would relate to any prediction in my mind about the course of the dollar. The earnings of Coke have been affected by the strength of the dollar in the last few years, particularly the strength against the yen when it went from 80 odd to 140 odd. That was a huge hit in terms of in terms of yen translation into dollars from those profits, and the strength of the dollar generally would hurt. But looking forward, I don't have any prediction on that. It's in Coke's interest to have countries around the world prosperous. I mean, they will benefit from increased prosperity, increased standards of living throughout the world. I think we'll see that over any 10 or 20-year period. I think people's preference for Coke will do nothing but grow, Coca-Cola products. So what I am concerned about is share of market and then what I call share of mind. In other words, what do people think about Coca-Cola now compared to 10 years ago or 20 years ago? What are they going to think about it 10 years from now? Coca-Cola has a marvelous share of mind around the world. Everybody in the world almost has something in their mind about Coca-Cola products, and overwhelmingly it's favorable. You can't try to think of 3 other companies like it. I can't do it in terms of that ubiquity of good feeling, essentially, about the product. We measure it by unit cases sold and by shares outstanding, and we want a lot more unit cases sold, and we like the idea of fewer shares outstanding over time. I'll be giving you that same answer 10 or 15 or 20 years from now, and I think there'll be a lot more unit cases sold then. It is true that the case growth slowed starting in the second half of last year and continuing through the first quarter of this year. But that's happened from time to time in the past. In my view, that is not it's not an important item. It may be an important item in what the stock does, in a 6-month period or a 1-year period, but we'll be around 10 years from now, and Coca-Cola will be around 10 years from now. And right now we own 8.1 or 2% of Coca-Cola, and we'll probably own a larger percentage 10 years from now because they'll probably repurchase some stock. The PE ratio of Coke, like virtually every other leading company in the world, strikes us as they all strike us as being quite full. That doesn't mean they're going to go down, but it does mean that our enthusiasm for buying more of these wonderful companies is less than it was when the PE ratios were substantially less. Ideally, those are the kind of companies we want to buy more of over time. We understand their business. This is that there's a reasonable chance, at least, that sometime in the next 10 years we buy more shares of either Coke or Gillette or American Express or some of those other wonderful companies we own. We do not like the PE ratios generally, but again, I stress that does not mean they're going down. It just means that we got spoiled in terms of how much we got for our money in the past. For our money in the past, and we hope that we get spoiled again. Charlie?
look like 10 years out or even further out, you don't really pay much attention to short-term economic developments in this country or that, or currency rates or any other such thing. They don't really help you in making the 10 or 15-year projection, and that's the one we're making. So we have tuned out all this noise in your projection, and that's the one we're making. So we have tuned out all this noise. Tune out the noise, and if you look at the big picture, we think Coke is fine.
It's hard to think of a better business in the world among big businesses. There's obviously companies that are starting from much smaller bases that could grow faster, but it's hard to think of a much more solid business. Zone 3.
Newport Beach, California, Bruce Lindsay, and formerly from Omaha, Nebraska. And I have a question. Some time ago I read that you were buying silver. I never knew the reason why you were buying silver.
Well, we covered the silver purchase in the 1997 annual report for a special reason. Well, it was part of a group of 3 unconventional investments we made, and one of those investments was of sufficient size so that we felt people ought to know about it specifically. And then we felt our shareholders ought to know that we sometimes do things that they might not have guessed that we would do from reading past annual reports. So we named the 3 unconventional investments. But in this year's report, we have stated that we will not be naming those investments unless one of 2 things happens. One is that they become of a size that you should know about them specifically in order to evaluate the kind of thing we do in Berkshire and the commitment of resources that has been made. Or 2, if regulatory authorities obviously if they require us to report it, we'll report it immediately. Or in the case of silver, a year plus ago, an important regulatory authority indicated that they prefer if we report it. We weren't required to do so, and our desire is to cooperate on that anyway, so we did report it. But we stated in this year's report that absent those factors, we will not be giving details on unconventional investments any more than we give any more details on our regular equity holdings than we're more or less required to do. We did say that we had changed certain of the unconventional investments that were described in the previous year's report, and we stated that we had entered into several new ones. So we are in some things that most of you, or maybe all of you, don't know about, but they aren't of sufficient size so that they're going to, in any material way at all, affect your investment. Charlie?
Nothing to add.
Zone 4.
Good morning, Mr. Buffett. Wayne Lang from Toronto, Canada. Last year, when you were asked about the year 2000 computer issue, you expressed some concerns about the cost overruns and the federal government readiness. Our 2 countries are in much better shape this year, but could you update us on your current thinking and what concerns you may have about the impact of the lesser readiness internationally on our company's revenues, supply chain, or on the stock market?
Yeah, last year I think I also told you I didn't really consider myself an expert on this, and what I tell you is just what I pick up from being on audit committees or talking to people who are a lot smarter than I am in this sort of area. But that doesn't mean they're right on it, because talking to people who are a lot smarter than I am in this sort of area, but that doesn't mean they're right on it, because my general feeling, and all secondhand, my general feeling is that the part of the world that we have to worry about is in pretty good shape. It's cost a lot of money in various places. It's cost us, some companies, it's cost a terrific amount of money, but I do not think it's going to be a big deal. And I could be wrong, but I'm less worried about it being a big deal today than I was a year ago. And Charlie, do you know anything to add?
No.
Does that mean you think it's going to be less of a big deal than you thought a year ago, or
No, it means I have nothing to add.
Okay. That's probably what I should have said in the first place. Zone 5.
Good morning. My name is Bob Brewer, and I'm from down the road in Lincoln, Nebraska. I just wanted to ask you how you think the continuing economic turmoil in Japan is likely to affect the global economy and the U.S. stock market over the next 5 to 10 years.
Well, Charlie and I are no good on those macro questions, but I would say this. I mean, the Japan problem has been around now in financial markets and banking systems. So it's been around for some time now. So I see no reason why it should have more impact on the rest of the world now than it has had in the last few years. And I would say it's had certainly very little effect on the U.S. in the last few years. And it's no factor in our thinking at all in terms of what we would buy or sell tomorrow morning. I mean, if we got offered a good business tomorrow, unless it was directly involved, I mean, its primary business was in Japan, but if it was a business in this country, that's not something that we would be thinking about. We would be thinking about the specifics of that business. We don't really get too concerned about the things that come and go. I mean, in the end, if we're right about a business over a 10 or 20-year period, just take See's Candy. We bought it in 1972. Look what happened in 1973 and 4, you know, and all the oil shocks and what this country was going through and inflation, all that sort of thing. For us to, let's say in 1972, somebody laid out a roadmap from 1972 to 1982 with the prime rate going to 21.5%, long-term rates going to 15%, and all of the things happening, the Dow going to 570 or whatever, 560, and that wasn't the important thing. The important thing was that this peanut brittle tastes like it does, which is terrific, and that over time we can get a little more money for it. So, you know, See's made $4 million pre-tax in 1972 when we bought it. It made $62 million last year. We don't want to be thinking about the wrong things when we're buying businesses, and that applies to marketable securities just as much as it does as when we're buying 100% of the business. If we're right about the business, the macro factors aren't going to make any difference, you know, and if we're wrong about the business, macro factors are not going to bail us out. Charlie?
Yeah, I think what's interesting in Japan is interesting to one as a citizen. Here's a major industrial country, and they understand all about Keynesian economics and everything else. And when it starts sliding down into a big recession, it just keeps going and going and floundering and staying down, and year follows year, and you take the interest rates down to practically zero and you run a big budget deficit. The economy still stays down. I think this has been very interesting to the economists of the world. I don't think any of them would have predicted that as modern a country as Japan could contract for as long as it did. And I think the cause is related to the extremeness of its booms in both land prices and security prices, and the corruption in its accounting practices and in its regulation of the financial system, including banks. I think it's an interesting lesson for the world of how important it is not to let a lot of slop get into the accounting and regulatory systems, and how a lot of folly in markets doesn't help either.
Sort of fascinating to, you know, people keep saying, well, why doesn't Japan stimulate? Well, they got short-term rates down to 0 and long-term rates at 2%. Well, that would stimulate me, but it's sort of, as Charlie says, it sort of defied a little bit some of the classical Keynesian theory on that. But in the 30s, we had the same problem in this country. We drove interest rates way down and toward the latter half of the 30s.
And I would argue that probably the extreme prosperity in America is related to this so-called wealth effect, with stock markets going up and up. And I think people thought that was a smaller factor than maybe it is.